The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Turning now to our first guest, Caitlin Long, the pioneering founder and CEO of Avanti Bank. Some would say Long is largely responsible for making Wyoming a crypto-friendly state, helping to pass dozens of laws that are favorable to the industry. After obtaining Avanti's special purpose banking charter, now her organization is applying to become a Federal Reserve member bank. Here to discuss the news is Caitlin Long herself. Welcome to the show, Caitlin. How are you doing?
Hey, good morning, guys. Thanks for having me on.
We are very excited to have you here. I guess my first question is why do this? Why join the Fed? Isn't that sort of antithetical to what Bitcoin is supposed to be all about?
The whole purpose of creating a bank in the first place is to ensure that there are sufficient US dollar services to the crypto industry. The crypto industry now has far in excess of $2 trillion in it, and the US dollar deposit capacity in the industry is only about 80 billion. And obviously not growing anywhere nearly as fast as the crypto industry assets are growing. So that was the basic reason for setting up the Wyoming SPDI charters. There are more technical reasons having to do with risk. There's actually a lot more risk in having traditional banks provide US dollar services to crypto companies than there is having crypto companies be able to work directly with the Fed due to the settlement differences between crypto and US dollars, which are vast. And right now, those risks are being unmonitored because all of the crypto activities are conducted through third-party banks.
So what happens should you get that approval? What happens to your business? What changes? What makes it different then?
Well, for one thing, we're not launched yet. None of the Wyoming SPDIs. There are 4 of us chartered now, more coming. None of us are launched yet. But for Avanti, the reason why we pulled the trigger on the membership application was simply to become directly regulated by the Federal Reserve itself. Most of the banks in the United States are actually state banks. And the way that it works is your state chartering authority is your primary regulator. And then most state banks are regulated by either the FDIC or the Fed, and they choose which of the 2 regulators. And in our case, it made sense because of the systemic implications for crypto to be directly regulated by the Fed. So it took an issue off the table and puts us into that vaunted category of Federal Reserve member banks, which is the most prestigious group of banks, those namely that have Federal Reserve master accounts and are members of the Federal Reserve.
So what changes in terms of, you were talking about settlement risk being a problem when it comes to traditional banks getting involved in crypto. What changes for you? Will that cause it? Will you, for instance, will Avanti then face that same kind of risk? What's different for you compared to those guys?
Yeah, that's a very good question. Very astute. Most traditional banks don't have the IT platforms to be able to handle crypto. That's a fact. Most of them only settle their books and records once a day. And as you know, Bitcoin settles every 10 minutes on average. Ether settles every 3 minutes on average. A number of other cryptos settle much faster than that. And so a bank can really get itself into trouble intraday. And the Federal Reserve, most folks know it mostly for the FOMC and setting monetary policy. But the vast majority of people who work at the Federal Reserve are bank supervisors. And what their job is to protect the payment system against a bank defaulting on the Fed itself. The Fed is just a bank that banks banks. And the biggest risk is, from the Federal Reserve's perspective, is that a bank defaults on the Fed. And there's actually a lot of what's called payment system risk, default risk by a bank, because of these settlement risk issues. And the banks just don't have the IT systems to be able to settle their books and records and reconcile them intraday on a minute-by-minute basis. Most of them are set up only to do it once a day. And Avanti will have an API-first technology architecture, which, again, most banks don't have. But it's such an obvious thing in the crypto world. You've got to be able to make API calls to have fast transactions. And if the banks can't offer that, then they really have no business being in crypto, and because they can get themselves in a leveraged position intraday and not even know it until they reconcile their books and records overnight. There's a huge tech upgrade cycle coming to the US banking industry as a result of all of this. And it's also worth saying it's not just crypto that's going to drive it, although that's part of it. It's also the fact that the Fed will be offering faster payments called Fed Now beginning in 2023 or 2024. And the banks are not going to be able to get away with only reconciling their books and records once a day and not having APIs once that happens.
So do your regulations get? Oh, I'll let you go. Yeah,
you got it. You got it.
Oh, I was just going to ask: are your regulations going to change compared to what's going on right now in Wyoming, which you helped orchestrate? Do you become more regulated than you would otherwise be if you stayed in Wyoming and didn't go to the Fed?
No, that's another good question. The answer is no, because Avanti set ourselves up to meet all of the federal banking laws. And we were just informally set up to meet all of the federal banking laws. We knew the Federal Reserve would want us to, even though there are some things about the Wyoming statute that don't require a submission to federal banking laws. We did submit to those. However, what this does is it just formalizes what we had already informally submitted to, which is federal banking laws, especially those applying to capital, as well as those applying to all of the compliance and bank supervision risks. What will happen now is if the Federal Reserve does grant our membership application, the way state chartered banks are supervised is the state regulator is primary, and then as I said, the FDIC or the Fed is secondary. And then every other year, the state regulator leads the regulatory exam. And then the other year, the federal regulator, i.e. the Fed or the FDIC, leads the regulatory exam, and they switch off, they work together. So what will happen is we'll actually be formally regulated by the Fed. Again, it's more belt and suspenders than necessary. We didn't need to do this, but it certainly makes things easier for the Fed because we look a lot more like a traditional bank to them, having met all of the same capital requirements as the traditional banks.
So stepping back a bit, this has been the summer of crypto on Capitol Hill, which many see as sort of a watershed moment. I know you've been outspoken on the issues around the infrastructure bill. So I wanted to zoom out a little bit and get your take on some of the federal level regulation going around relating to the crypto industry at this point in time. I'm just going to ask you straight up. I want you to rank SEC Chair Gary Gensler's performance to date as it relates to crypto regulation. What's your current thinking on how well he's handled that role?
Well, gosh, he hasn't done anything yet. He's said a few things. He's made some speeches, but he hasn't actually done much yet. And so I think we're waiting for that. He was pretty, in his confirmation hearings, he was pretty clear that he felt that Congress needed to clarify these laws. He wasn't going to overreach relative to the SEC's jurisdiction. And we haven't seen him do that yet. He's asking Congress to clarify. And I do believe that there will be something coming out in September. The Federal Reserve is working on a paper. We thought there might be a chance that Chair Jay Powell would release it at Jackson Hole last Friday. He did not. He didn't even mention crypto or stablecoins. But in his most recent testimony on Capitol Hill in July, he did say there is a paper coming out in September. I believe it's coming from the Boston Fed, looking at CBDCs and private stablecoins and the systemic risks that the Boston Fed President Rosengren has been talking about relating to stablecoins. And it's worth, to your broader question, it's worth underscoring when Chairman Powell said that he thought stablecoins should be regulated as either bank deposits or money market funds, that says either that crypto companies in the US that issue stablecoins will either have to be chartered banks or registered as money market funds. And I think that's pretty logical. That seems to be where things are going in the US. What's fun about what Wyoming did is it doesn't require any congressional authority. It's already there, wrapped up in a bow, ready for the DC folks to approve, and doesn't require any congressional action. Either of the other actions that Chairman Powell was alluding to will require congressional action, because if stablecoins are traded as they are today outside of broker-dealers, that is going to require a change to securities laws. Right now, in order to trade securities, you have to go through a broker-dealer or you have to be registered in some way with the SEC. And so having the ability to take what is effectively a money market fund or an ETF and trade it among consumers, that's new and different. That will require congressional authority. Same thing for the federal banks. They don't have authority to do what the Wyoming banks have authority to do. And so here's, again, just to underscore, Washington, D.C. already has the regulatory tools to bring stablecoins inside the banking system. It's called the Wyoming Special Purpose Depository Institutions, and they've had the ability to do this since October. And it just remains to be seen. Now we're heading into a period where all of this, I think, will be coming to a crescendo, and you will probably see action on a number of fronts coming out of DC in that September-October period.
Yeah, I wanted to home in on the stablecoin stuff because I know at Avanti there's the Avit, which my understanding of the Avit is more of a back-end systems. Are there any stablecoin plans for Avanti that we should be aware of? Are there any sort of consumer-facing stablecoin plays that you see in Avanti's future? Really curious as the stablecoin sector seems to surge in these last few months.
Sure. Avanti is not looking to issue a stablecoin. We are looking to issue something that is structurally very different, but to your point, uses the same technology as stablecoins. The structure of Avit is a bank product. It is the functional equivalent of a digital cashier's check. And a digital cashier's check can be endorsed over to an infinite number of owners, just the way stablecoins work. And so the idea here is if this is a bank issued product, it takes away a lot of the legal and regulatory, as well as accounting and even possibly tax risk that exists with existing stablecoins. Existing stablecoins, that's phenomenal technology. I've saluted the market for creating that technology. However, mainstream users really struggle to use those because there's no regulatory certainty and legal certainty. If you can't be clear that you have clear legal title to your asset, then mainstream users, especially a fiduciary asset manager, just can't take the risk to trade those assets. And moreover, because of some of the structural features of stablecoins, they're not structured to be cash equivalents under US GAAP. And most likely, again, the IRS has never said anything in the US about the tax consequences of stablecoins. But most tax advisors, if you read what they've analyzed, stablecoins are actually crypto assets. And every time you use them, they trigger a tax reporting obligation. Even though the amount of the tax may be minuscule, it's whatever the decimal point difference between $1 and the price at which you bought or sold a stablecoin, it's nonetheless a headache from a tax reporting obligation. Those are, again, I can't give legal or tax advice, but I think the stablecoin issuers, especially USDC, gives a pretty clear warning that it's not clear what the legal and regulatory status of USDC is, and frankly that there's no clear legal and regulatory status for it anywhere in the world. And I don't mean to single them out. I think their attorneys just being responsible in warning the users that there's a lot of regulatory risk. And so what we're doing is looking to clarify that regulatory risk for these types of products, get them inside the banking system. It actually helps the Federal Reserve from a monetary policy perspective because you're not trapping collateral outside of the banking system. That's a wonky argument. If you want to dig into that one, I spoke about that at the Cato Institute last November.
Yeah, so getting to that, you've been describing what is currently in place, the system. What should be done with stablecoins? I mean, should they be allowed to hold securities to back them? Is that the ultimate revolution in what stablecoins are about? The fact that they can be money market funds that trade as if they're $1. What's wrong with that? Is there anything wrong with that? Should it be a different class? What's your opinion?
Well, it comes down to whether the stablecoin issuers are inside the Federal Reserve System or not. So if they're securities, if they're money market funds or ETFs, then they're not inside the Federal Reserve System and don't have direct access to the payment system and can't issue them as a bank instrument. Again, getting the cash equivalent treatment and legal and regulatory clarity of issuing them as a bank instrument. If they're inside of a bank, then the question is, what's the regulatory capital? All of the other compliance and supervision functions are easy to comply with once You become a bank. I'm not saying they're easy to comply with, but once you become a bank, it's very clear what the obligations are. The capital is the big one. And here, I actually take the side of the banks. If non-banks are going to be accessing the payment system, they need to be subject to the same capital and supervision and compliance requirements as the banks. Otherwise, why would anyone become a bank? And so, right now, the only types of institutions in the United States that can bank at the Fed, in other words, that can get what's called a master account at the Fed, and get direct access to the payment system so they can clear US dollars. There are only two types of institutions that can do that. One is FDIC insured banks, and the other is depository institutions eligible for FDIC insurance. Avanti falls into that second category. Stablecoin issuers don't fall into either category right now. So again, Congress would have to change the rules. But if Congress relaxes the rules for stablecoin issuers so that they're not subject to the same rules as traditional banks and depository institutions, then I can see why there's going to be a big fight. And it may be very difficult for Congress to get any rule change through. What we're presenting is, hey, we're a bank that's a depository institution eligible for insurance. So we check that second box, and we're subject to all the same rules as traditional banks. So if that's the case, and we're willing to pay all that freight as the same as traditional depository institutions, then let us in. That's the choice that we've given the Federal Reserve.